Good evening, everyone. It's December 17th. It's Friday. Hope everyone had a good day. This is going to be a short video detailing how I use my 9 and 20 EMA kind of strategy. I got a few questions from a lot of members asking, how exactly I use this, especially in relevance to which time frames I use it on. Uh, so for just a quick answer, I use the 9 and 20 EMA on all time frames. The 1 minute, 3 minute, 5 minute, 10 minute, 15, 30, 1 hour, 4 hour, and even the daily. I always look at which time frame for the current trend, for the current period of time that I'm looking at, and how it's being respected, right? So the way that this looks on the 5 may not look the same on the 10. Right, pretty similar, but may not look that way on the 1. Right, we can see these. So I'll go back here on the 5. I have a few different charts here. I have Walmart, I have Pepsi, and AMD. Okay, and I have 3 different time frames. This bottom right hand corner is the 5 minute. The top left is Pepsi on the 1 minute, and AMD here is on the 3 minute. So Walmart being on the 5 minute, I was just scrolling through. Normally I have the 5 minute on, right? The cues were kind of choppy today. In certain cases, it wasn't a very clear trend. There's a lot of up and down. There was plenty of opportunity, but not something that you could just set and forget. So going through, I was just scanning through the tickers that I like to trade, and Walmart popped up, one of my favorite tickers to trade that I have found rather recently. And I saw that it was in a downtrend. Okay. I think I saw it at about, what time did I say? Walmart right here, 12:30 p.m. So I'll mark an arrow here at 12:30. So right. So we can see here, right? The day had already gone by. I had missed majority of the move, but it wasn't a very clear downtrend, and I didn't see any sort or sense of reversal quite yet. So knowing that this was very clearly respecting the 20 EMA here on the 5 minute and getting shoved down by the 9 on most cases, right? That's normally a first scale in. Now, if you're looking at your indicators, your EMAs, a basic, most general understanding of the 9 and the 20 is that the 20 is a crucial area that you want to be maintained as support for either direction that you're moving. And the 9 is a general area for you to start to scale in. Okay, you can scale in around here, maybe in between the EMAs, and stop out either if the 20 aligns with a technical kind of aspect of it. So if we get maybe like a supply zone, this, and if you get a higher high over the 20 EMA, right? The closer you get to the 20 EMA, the safer the entry, but also the less probability of it working out in most cases. Now, not always. So I saw this here at 12:30, and I said, right here, I'm looking for another 5 minute 9 EMA tap on Walmart for a scale input entry. So for me to take an entry, right? So right here at 12:30, we mentioned that right here on this candle. I was waiting for it to pop up. Didn't happen yet. I'm watching it very closely, and very shortly I see it instantly tap, right? So if we see it instantly tap, I want to go to the 140 send to 2 charts. So this went absolutely crazy, right? As we can see here. So if I mark here at 12:30, I traded the 141. That's right. 12:40. Look, I have it marked here. Right there. we get an entry around this area right here. Right when the 9 EMA taps, I'll highlight this. Okay, so right there, 1250, we see it here, 1250, 1255. I get an average of about 30, 35 cents in between that area. Okay, that's where I'm getting filled. So when it does pop right there, that's my edge. I'd normally add around the 9 EMA, even if it pops up a little bit, I'll add. Right, in these instances, right, these were very prime ads had I been watching it a little bit earlier, but I still see that there's opportunity left on the table, and I take an entry there. I don't know if it's going to work out. This could start to curl and break over VWAP. I don't know, but it's worth taking an entry because this is something that I've traded many times. So we can see here, I get entry about 1250. Okay, right there, I would say 33 cents average. Okay, to the very top here, we can see that 30 minutes later at 118, I'm up 180%. Okay, and I hold these contracts through the rest of the day. I don't hold all of them, I hold a few. I scale most up there, but in about 30 minutes, I make 180%. I took a contract that cost about 30 some dollars and was able to sell them for about over $90 a piece. So we can go through, and towards the end of the day, right, there wasn't very much volume that for the scale out up here, but you will get filled around the mid price, right? But this is over 200%, right? Over 200% on the remaining bit. I only had a few shares left, but it was still something to, right, pay attention to. Look at the dump on Walmart. Very, very strong dump here, very deep in the money, but you know, due to the fact that these are 0 DTEs, there was a lot of theta involved with them, and also the fact that we had quad witching as well. So, right, you can find entries in a trend that seems like you can't find one if you didn't have these, right? You would have felt like this was too late. You missed the move already, but what this provided was multiple entries, right? I even took another scalp here, right there, right? Walmart, another 5-minute 9 EMA test coming, 1:32, right? 1:32 p.m. Right? What time is that? 1:30, around 1:32, the same time. Perfect little scalp there, right? That was a nice move. If we look at the same contracts, right? If you take it at 1:30, you look at right here, 1:30. Okay, and it pops down. We can see down here, this is about 2 o'clock. Right up here at about 2 o'clock, right? That's another 30% scalp. And 30%, guys. I mean, in like 20 minutes or less. So, you know, always look at this in a very clear trend. The 9 and 20 EMA works in a very clear trend. So I had, what did I have here? I think it was AMD, yep, and I was on the 3-minute. So let's look at it on the 3-minute. Right, if you're looking, and let's say that, you know, maybe on the 1-minute, your EMAs are too choppy. So I go here, right? It's pretty choppy for the most part. Okay, now you do get some good moves in there, right? But if you wanted a clear sense, something that wasn't holding to it too closely, right? You look at the 3. I would, and we can see here, you know, this is very closely following the trend. But on the downside, when we see a 9 EMA cross to the downside, that's typically a bearish signal, right? We see this large bearish candle. A lot of people would be afraid to enter here, but what truly happens is multiple opportunities. So look at every time the price action comes close or taps the 9 or 20 EMA. So I would say this is a good short. Perfect entry right there where the edge is presented. VWAP rejection, right? A break and base of VWAP. Also, no candles closing over the 20 EMA. Another perfect entry right there on the 9. And then, of course, when we get a large rally down after this consolidation, we get through some chop. But you can still get some good scalp entries when it does shove down. But you have to be quick, right? You would know to scale out in this kind of intermediate demand zone. Right, so there's multiple entries here. I just, you know, noted, I would say 3 or 4 strong, 4 strong entries, right? Even if you took this put right here, very strong move. Okay, let's look at the 1 minute. This is on Pepsi. I'll blow this up, knock out the level 2. Right, this is on Pepsi. This is on the 1 minute. I use the 1 minute quite often. I think it's great for scalps. A lot of people get shaken out by it, but if you're just looking to get into a trade and get out with something to base risk off of, right, the 9 and the 20 EMA, it's perfect. So we see a 9 EMA cross below the 20. It's a bearish signal. So what we should look for is for price to bounce off of the 9 or the 20 EMA, right? If it's bouncing off and respecting the 9 much more clearly, then it's a stronger trend. So we can see an entry was there. I'd say one was right there as well. A very clear entry there, tapping the 9. And 3 entries there. Very strong move. Remember, the later the entry, the quicker the exit. A lot of people get into this problem where we're very far down extended and we get a 9 EMA tap like this and they take it, right? When before it was little green pops, right? This is a short covering. This is a short covering, okay? These are shorts covering for a big profit. The goal was already just tapped, right? This target right there for a day trader. And we start to see it pop up. Now, if you do take a short here, right, every time it did tap the 9 EMA, you look for a large reaction to follow through. Now, we can see very clearly here that this support was not broken through. If you take a 9 EMA, you're looking for a fresh low, right? 9 EMA tap, this low of the candle broke. 9 EMA tap, this low of the candle broke. Same thing, 9 EMA tap, low of the candle, broken. So this doesn't happen here. We don't get fresh lows. You see buyer step in here by this lower wicks. You have to be quick, guys. You know, if you get an entry right here and it comes right there, you need to just stop out, right? Even if it taps the 20 right, just stop out for it as quickly as you can, because, you know, if you are wrong, right, then who cares? It's going to tag you out. You can get back into the trade. But, you know, if the trade just starts to rip hard and you stop out right there, you save a lot of capital, right? Not just monetary capital, but, you know, mental capital. So, you know, I use this every single day. You guys should be very accustomed to it. There's many ways to make trades through this, right? There's, look, a low, a higher low. Okay, and another higher low. A downtrend break that occurs. Okay, so when all this bullish kind of formation here has been, you know, identified, but you miss the entries on the higher lows, you're afraid to buy the bottoms, watch your EMAs. You can make money on the moves up. Okay, look, 9 EMA tap, right? The 9 crosses the 20. Okay, that's a good entry right there for in most instances with the proper setup, higher lows and a downtrend break, right? 9 EMA tap there, good entry. 9 EMA tap there. Remember, the later the entry, the quicker you take profit, right? If you're taking a later entry and you're looking for a scalp, okay, what's your target? Oh, to make a higher high. And when we make a higher high, you sell, right? That's what happens. Look what happened here. This was a pivot to be broken. What happens? We break a higher high. It pulls back because people are locking in profit. The problem is that when people buy, you know, when they buy this and it goes long and they're sitting there like, oh, I want it to go more and more. It will, but it takes time. It doesn't just go straight up, okay? So we need to be very patient and understand that later entries, it's like playing hot potato, right? We do not have the luxury of the entries down here where traders can hold on for a little bit longer. Okay, because, you know, this trader that's down there, if this comes and pulls back on them, you know, they're probably close to break even, still green. But if you're right here, this pulls back, and unless this is within your plan to hold for a big kind of dip like that, or, you know, you have enough room to scale in your position size, then you would hold on. But if not, you have to do what's consistent and stop out, right? So we can even see it presented here, right? Look, 9 EMA on the 1 minute crosses down below the red line, the 20. So watch for the as close as you can to the EMA taps. I see a possible entry there, a very clear entry there and there. Okay, and you know, we get lower lows, right? Is the lower lows in the downtrend is just like a higher high. If you get new lower lows, you should be scaling along the way. Scale portions, guys. Okay. I use this just about every day. You'll see it very often. I traded Pepsi this day using the 9 and 20 EMA, and look how beautiful it worked out, right? We saw a point of reversal. There was the low or lower low, lower low, lower low, first higher low, second higher low, okay? Aiming for these miniature supply zones, intermediate supply zones, okay? Aiming for that. Remember, this wasn't formed yet. What happens here that I see? 9 EMA overtakes the 20. It holds above the 20, okay? And then you see it start to shoot off, right? It's going to push for this higher high break right here, okay? And once it does, you see 9 EMA respect, 9 EMA respect, 9 EMA respect. Every time I mark an arrow, that's a possible entry that you should be watching. 9 EMA respect, another entry there, and an entry there, and there, and there. Look at how many entries were provided, right? Imagine if you enter this and you know now that as long as we trail the 9 and the 20 EMA, you can hold on to a winner. You can use that on all of your time frames. Your 1, your 5, your 3 minute, your 15, anything like that. If you go into swings, you'd use a larger time frame, maybe the 1 hour, right? So guys, please study this. Go through in your review this weekend and plot the 9 and the 20 exponential moving average, the EMAs, onto your chart and see how you could use this. Remember, we do not trade and use the 9 and 20 EMAs when it's choppy. They're useless to us. I don't care for them. That's when my strong understanding of price action of supply and demand comes into handy. Okay, we can see on the 1 minute, look at this rally. Look at all the entries. Boom, entry, 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 right? But when it's choppy, what are the EMAs doing? They're not doing anything for us. They're in the middle. Now, how do I gauge that? There's your pivot. Here's another pivot, right? That's your most recent higher low. Respect. Look, all following VWAP, the confluence there. Support, respect, support, respect. This is actually a higher low. Another higher low. Another higher low, right? You can see that this was already a support level. A higher low, right? And so on and so forth. Okay, so, but the EMAs don't do anything for me when it's choppy, right? That's where, they're useless to us, and we need to understand that. We shouldn't just be taking, just because we see a 9 EMA cross above, right here, that doesn't mean, oh, I need to slap that, right? If you did that every time, your count will go to 0 very quickly. We can see here, if I clear this drawing set out and I zoom out, right, there's a clear kind of channel here, okay? You could, I would mark really kind of this, right? Everything above that, these are like wicks. If I go to the, 10 minute here, look at that. You see the channel? I drew that from the 1 minute, right? But it's the first kind of candle there and there. You see no candles closing above, but you do see buyers stepping up, right? So please study this. I hope that this video helps. I'm going to try to keep it short just so everyone can, understand this rather quickly and review this over and over. If you do have any questions about the 9 and the 20 EMA strategy, please, feel free to ask questions in the Stacks chat or the questions channel. And, guys, keep studying, keep grinding. It's great to see everyone progressing so far and doing very well. So halfway through December, let's continue to kill it, and let's have a great year in 2022. So thank you guys, and I hope this helped. You guys have a good night.